Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Wednesday, January 11th, 2023. I just want to remind you that we have tested last week. Not this week. This week we've been trading in the 130s and upper 120s, but we tested this, what had been a targeted zone of long-term support since October, if you've been following the daily Apple report since we started it. And the 122.78 to 123.43, convergence of two meaningful channel bottoms, able to contain selling with respect to 122.78, not only through the first quarter, but even into later year. A longer-term resistance in the 170s in reach now. I'm going to keep saying over the next 3 to 5 months may take longer, but that is the big picture. So in terms of investing in Apple, as I've been saying, if you're an investor, not just a mere trader, that is to say, day trader, swing trader, 2 to 3 week position trader, if you're an investor, this is the area, the low 120s. On the weekly chart, it comes in between 120, 120, and 122.67. We might not see this area again. It's hard to say. But given the fact that we closed a few days ago above this 126.36 descending channel top, the market is set up now for 2 to 3 weeks. Bullish continuation into the 140s. 142.80 is a new descending 1/3 speed line that is based in part on last week's low. And 148.23 is, of course, a new 4-month channel top that is also based in part on last week's low. This upper area, 142.80 to 148.23 up here in the support resistance column, is considered a 2 to 3 week objective now above 126.36. And so that is the 2 to 3 week outlook. Let's go back now to the 3 to 5 day. That's another story altogether. And that is well suited for swing traders. Having closed last Friday above the 126.36 descending channel top, we're in a 3 to 5 day objective. We're 3 days into it. Really 2 days following the settlement Friday, but a 3 to 5 day target in the mid 130s, 134.68 to 134.81. 134.81 is this former channel bottom here that we settled below a few weeks ago, and 134.68 is this more steeply descending extreme channel top. This area is in reach over the next few days. On an intraday basis, if we push or open above 130.90, I ask, and I say, yes, it is in reach today. We have that kind of volatility right now that is not out of the question to reach the 134.68 to 81 region on an intraday basis if we happen to push or open above 130.90. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. On the way up and down from 130.90, I do have carefully chosen minor points that are very well suited for aggressive day traders. 132.37, 133.41. On the way down, 128.79 and 127.70. Know that holding below 130.90 does allow 126.36 on an intraday basis where we could bottom out through the rest of the week, and as I say, above which this area remains a 3 to 5 day target. Now, if we were to close above 134.81 today, and I think that's a long shot, but it is possible. If so, then the 140s that I showed earlier are likely by the end of next week. This area in reach by the end of next week if we close today above 134.81. So in terms of swing trading, it's buying 126.36, selling 134.81. We could trade inside this zone for the next better part of a week. Know though that the 2 to 3 week time frame remains bullish above 126.36. And if we close above 134.81, no good reason to be short this market as we move through the rest of the week and into next, because over over the following full week of trade, we should push into this zone of resistance. This 142.80 to 148.23 area can snag buying pressures all the way through February trade. We could fall off again from here, back into the low 120s perhaps. So this is good profit taking if your time horizon for trading and investing is nearer term. If you bought Apple last week in the low 120s and you're holding out for a good area to sell, it would be the 140s. If your time horizon is typically in the kind of 2 to 3, 3 to 5 week time frame. So if we were then, though, to close above 148.23, we have another 2 to 3 months then before reaching into the low 170s. In this low 170s I mentioned, I think that's a realistic 3 to 5 month target, although the environment we're in is one of recessionary talk and a depressed economic environment. And so I think, that's why I think we could top out here, fall back. We could trade inside this wedge, actually, for the next few months. But it would be a settlement above 148.23. I think that should result in an accelerated 2 to 3 month rally into the low 170s where Apple could top out through 23. Perhaps. Now, as for the downside, if we break today 126.36, we might actually test 123.43. I have these minor points here, 125.02, 124.17 on the way down. Let's just say that closing today below 126.36 would signal the 122.78 to 123.43 area tomorrow, which is once again on the daily chart, a convergence of two meaningful channel bottoms where we could bottom out once again, not only through January, not only through Q1, but even into later year. If we were to close below this area, I really need to see how the week fleshes out. And if the week fleshes out, closing Friday below 120, 120, we remain heavy through the rest of Q1 and even perhaps into the middle part of the year. Within 2 to 3 months, I would expect 102.73, this long-term 5/8 Fibonacci, where we just might bottom out into later year. But honestly, as I've been saying in previous videos, if we close below the low 120s, I don't think there's a good rationale for being a long-term investor in Apple. I would bottom pick the low 70s over the following half year or so, because I think that's what may play out, this full unraveling, full channel extension by closing back below 120, 120. But I'm not expecting that scenario. We've tested long-term support, and I think the market is primed for recovery into the 140s by the end of February or sooner. And as I said, holding above 126.36 over the next 2 to 3 weeks. I'm going to leave it at that for Wednesday's Daily Apple Report. Of course, I'll be back again tomorrow. Please click like and subscribe if you haven't already. I think I forgot to ask you at the top of the video. It helps us out a great deal, actually, in being found on YouTube. And share the content, if you would, with friends and colleagues. I'll be back tomorrow with Thursday's Daily Apple Report. You have a great evening.